Hello, everybody. Thank you so much for joining us today on Webinar Wednesday. My name is Tiffany Mintz, and we appreciate you guys taking the time to join us today. I'm one of the business development trainers, and today we're going to discuss our general product overview. As a courtesy, all phone lines have been placed on mute to limit the background noise and distractions. So if you have a question, I encourage you to use the chat box or the questions box and enter your questions and comments there. And we're going to do our very best to answer them as they come in. However, if we're unable to provide you with an answer, during the presentation, we will be sure to research it and follow up with you with an FAQ shortly after the presentation. Finally, if you would like a copy of today's webinar and or the webinar link, but you're unable to register in GoToWebinar, please be sure to send us your email so we can make sure that you're included when we send out the presentation later on today. With that being said, I believe I've covered all the housekeeping. So let's go ahead and get started. Before we jump into our loan programs, I want to take a few minutes to discuss some of the advantages to working with Sprout. We have a team that will review your loan scenarios, provide clarification on guidelines, and perform bank statement calculations on your behalf. Our iQualify tool is our interactive website that provides loan product recommendations and will give you some pricing options. Acorn is our proprietary AUS system, and it's available with Calyx Point, Encompass, and we also have a web-based version. We encourage you to use our Sprout marketing store where you can customize flyers and collateral materials. And of course, our business development training team is always available for in-person training and virtual training. So just please reach out to us if you'd like us to come in or do a virtual training or in-person training once COVID-19 sort of, releases or, unlocks us or releases us to be able to go out and meet with you personally. And then finally, Sprout Mortgage is willing to review any files that may not meet all of the guidelines, but do exude some strong compensating factors. So please reach out to your account executive if you have a loan that doesn't quite fit into the box. We want to have the opportunity to earn your business. So let us see how we can help you. All right, as I stated in the last slide, the iQualify tool is still available to create loan scenarios and receive recommended loan programs. All right, so we'll talk about that in just a little bit here. The iQualify tool does have the same look and feel. So if you've been working with us, you are familiar with the iQualify tool. Same look and feel. A couple of new things to point out: if the loan is a purchase, you will need to specify if they are a first-time home buyer. Also, we've updated the reserves field to show 9 months PITIA or more, just based on some of the new parameters in our program. Pricing options will also display. Users are able to email the pricing summary and or the pre-qual. And just an FYI, if you are a first-time user with iQualify, you will need to register your email address to receive access to the pricing screen. Again, place those questions in the question box, and a member of the business development team will answer them as we go through the presentation. Anything we can't answer or we don't have the answer to at this time, we'll follow up with an FAQ. All right, let's talk about Acorn. Acorn is Sprout's automated underwriting system, and it's specifically designed to quickly and confidently inform potential borrowers of loan approvals through a simple process that is triggered right from within your own origination platform. And as I stated earlier, it conforms to Calyx Point and Encompass, and we also have a web-based version. Acorn can be used at any time during the day or night to determine if your non-QM borrower qualifies. And it's designed to provide conditions that are specific to the loan so that you'll know exactly what's needed before the file is submitted. Sprout has many product categories that can accommodate your borrowers, the non-QM borrowers. And I'm going to provide you with some highlights now, and we'll cover the parameters of each of the programs that we offer in more detail a little bit later in the presentation. The A10 is our bank statement program. It's for self-employed borrowers whose income is verified based on 12 or 24 months of business or personal asset statements. We also offer a 1099 option. The borrower or the lender may choose to provide either 12-month statements or 24-month statements, but it's important to note that there is a price improvement when the borrower opts to provide 24 months, so keep that in mind. Moving over to our full doc category, we'll start with our E1 expanded jumbo loan. This program offers loan amounts up to $3 million. Our J10 is our jumbo prime full doc program. It allows for 1 year of income documentation. We offer ARM terms on this program, and loan amounts go up to $4 million. Moving down to our A11, which is our asset depletion program. The A11 program can use the borrower's asset portfolio as the primary source of income. To determine monthly income from asset depletion, we're going to use 110% of the borrower's assets and divide that figure by 60 months in order to qualify your borrower. Our debt service coverage program is back. So we have the I-10 program. This program does not require personal income to be documented, and we're looking for the rent to cover the proposed housing expense by 115%. And we're going to talk a little bit more about that later in the presentation. And then finally, the J10, the A11, and the I10 are eligible to foreign national borrowers. All right, so the screen that you see here represents some of the universal features on our program. These are parameters that most of our programs share in common. I'm going to go through the list here very quickly with you. Cash out proceeds can be used to meet the reserve requirements except the A11 asset depletion program. Keep in mind that the borrower must have a minimum of 3 months PITIA in reserves that come from their own funds before cash out may be used towards reserves. Many of our loan programs require 6 months or more in reserves, so it's important to note that the first 3 months must come from the borrower's own funds. There's no mortgage insurance premiums on any of our loan programs, no county loan limit restrictions, no limit on the number of properties that the borrower already owns, no previous landlord history for investor occupancy, and our investor debt service coverage program qualifies on the note rate. Airbnb income can now be used towards qualifying income. On a full doc program, the FICO score of the primary wage earner is the qualifying score. Escrow waivers are available on LTVs below 80%, reserve requirements for multiple finance properties. Something to keep in mind here, if the subject property is a primary or second home, the reserves are increased by 1 month of PITIA for each finance property. And if the subject property is an investment property, then the required reserves are increased by 2 months. Again, foreign national borrowers are allowed on the J10, the A11, and the I10. Remember this, applicants with work permits issued by the U.S. do qualify as U.S. persons, so they are no longer deemed as foreign nationals. All right, let's go ahead and move to the next slide here. We want to make sure that you are maximizing the potential of our non-QM programs. And the list here on the screen shares some of the circumstances where a non-QM loan may be an option for your borrower. I'll read through these very quickly. Receiving a DULP refer result on an agency loan. Maybe there's a county loan limit restriction. The borrower doesn't want to pay mortgage insurance. We don't have any mortgage insurance on any of our SPAIO programs, as I stated earlier. The borrower does not meet reserve requirements, so we can use cash out proceeds for reserves on many of our programs. Seasoning on significant adverse credit. Our seasoning requirement is generally 4 years. There are some variances on some of our other products. We'll talk about that here shortly. The borrower, if the borrower can't qualify using their tax returns, we have bank statement options for borrowers who are unable to document their income through tax returns. And then for investor borrowers who currently don't have a primary home or prior landlord experience, as I stated in just the previous slide, that our investor borrowers don't need to have a primary residence or have previous landlord experience. So those are some of the common reasons to look at a possible non-QM option for your borrowers. All right, so let's jump into the A10 bank statement program. Our goal is to provide you with superior service, and here's one of the ways that we're able to do that. We have a team of experts who will analyze your bank statements to determine the borrower's qualifying income. This team is dedicated to income analysis, and all you need to do is log on to the website, click on the scenario request tab, and upload the required documents. That information is listed here on the screen, but you're going to provide your 1003, a credit report, bank statements, income documents, and or condo documents, and upload them to the scenario request tab on the SPAIO website. And the turn time for response and program recommendation is approximately 24 to 48 hours. We use 4 different methodologies when determining income to qualify on our bank statement program. Excuse me. I'm sorry. In general, we use 50% of the average total monthly deposits over a 12 or 24 month period to determine the income. On the business account analysis method, that calculation is based on the average qualified deposits for the last 12 or 24 months. We'll multiply that by the profit margin and then by the ownership interest percentage of the borrower. I think it's important to define what qualified deposits are so you have a clear understanding of what we mean when we use the term qualified. So Sprout defines qualified deposits as all deposits received as compensation for the business or service that's provided by the borrower. Keep in mind that sourcing may be required for deposits that are unusual in frequency and or amount. All right, so let's move to the personal account analysis method. This method will utilize 12 or 24 month personal bank statements as long as the borrower's deposits resulted from self-employment. And then the income is averaged over the analysis period, which would be 12 or 24 months. On the 1099 tax form method, the income is determined by 1099 as an alternative to business or personal analysis methods. The following requirements have to be met. Self-employment income must be derived from personal services performed by the borrower, and the borrower must receive regular ongoing compensation. Under the 1-year option, income is calculated by taking 90% of the income that's reported on the 1099 and averaging that figure over a 12-month period. If we're using the 2-year option, that 90% of the reported income will be averaged over the most recent 2 years. It's important to pay close attention to income trends when we're using these methods because Sprout is going to take, excuse me, the most conservative approach. So if using the 24-month option and the income is declining, the most recent 12 months is going to be used. If the income is increasing, the average 24-month period will be used. Again, please, feel free to put your questions in the chat box or the question box, excuse me. As we know, each business differs with regard to inventory and expenses. So the profit margin percentage used to determine income is based on the type of business that the borrower owns. So in this section, excuse me, I'm so sorry. I need to take a sip of water, guys, sorry. In this section, we're going to highlight the different business category types. Excuse me. Type 1, we're going to use an 85% profit margin. The requirements for the type 1 business, the borrower is going to be the only employee. The business is a service with no inventory. So an example would be, a piano teacher. The service provided may not include the use of heavy equipment or vehicles. However, can require the use of the business owner's personal vehicle. Type 2 business, we're going to use a 60% profit margin. The requirements for a type 2 business, the business may have no more than 2 employees, including the borrower. The business provides a service and carries no inventory, so that's important with this type 2. And then again, the service provided may not require the use of heavy equipment or vehicles. Type 3, we're going to use a 35% profit margin. The type 3 business is defined as any of the following business types: manufacturing, construction or contracting, retail stores, food services or restaurants, and transportation. With our type 4, we're going to use a 20% profit margin. And for the purposes of underwriting guidelines, a high value dealer business is defined as a business where the primary source of revenue is purchasing or reselling real estate, jewelry, recreational vehicles, and or equipment like trucks, boats, off-road vehicles, things of that nature. In these cases, the profit margin percentage is going to be limited to 20% because of the potential for higher expenses with these types of businesses. All right, and examples of the type 4 businesses, again, are listed here on the screen. All right, so the product parameters of the A10 program. We offer 15 and 30-year terms as well as ARM terms. This program is available to U.S. citizens only. There's no foreign national borrowers on this program, so citizens and U.S. persons only. Loans must be run through Acorn, and there's a 3-year prepayment penalty required for investor occupancy. With regard to self-employment, at least one borrower on the transaction must be self-employed for a minimum of 2 years. 12 to 24 months business bank statements are required. This program does not require a P&L. 50% of the revenue deposited will be used to qualify. The max DTI ratio is 50%. Minimum credit score is 680 with a max LTV of 70%, going up to a loan amount of $1.5 million. If we're doing cash out, the max LTV is going to be 70% on a primary residence with a 740 credit score. Minimum loan amount for the A10 is $100,000. The eligible properties are 1 to 4 units, warrantable and non-warrantable condos, and condotels. Permissible occupancy, primary residence, second home, and investor occupancy. But if we're going with investor occupancy, the borrower must sign a business use affidavit. Required reserves. If the loan amount is less than $2 million, we're going to require 6 months of PITIA. If it's over $2 million, we'll require 12 months. Reserve requirements for multiple finance properties. We mentioned this a little bit earlier in the presentation. If the subject is a primary or a second home, 1 additional month is required for each finance property. If the subject is investment, we're going to require 2 months. Reserve requirements for cash out. 3 months PITIA, again, must come from the borrower's own funds. That excludes cash out proceeds. Once the borrower provides evidence of 3 months reserves on deposit of their own funds, cash proceeds may be used to meet the remaining reserve requirement. All right, so keep that in mind. That's something new. As far as gift funds, we do permit them on all occupancy types. Gift of equity is also allowed, but requires a 5% reduction to the LTV. With regard to credit history, 4 years seasoning. For foreclosure, bankruptcy, short sale, and deed in lieu. Less than 4 years is permitted, but we're going to max your LTV at 65%. If it's less than 2 years, it will not be eligible. we will allow a one-time 30 in the last 12 months. On mortgage history, no late payments are permitted within 6 months of the note date. Okay, so keep that in mind. As far as appraisal requirements are concerned, if the loan amount is less than 1.5 million, we're going to require one full appraisal and a collateral desk analysis or appraisal review report. If the loan amount is greater than 1.5 million, we're going to require 2 full appraisals plus the collateral desk analysis and the appraisal review report. We do have some additional information to share with regards to COVID-19. That information is here on the screen. I'll read it to you. A loan is not eligible for sale to Sprout if the total bank statement deposits for the month preceding the closing are less than 75% of the average deposits over the bank statement analysis period, okay? So this is temporary due to COVID-19. If the deposits are less than 75%, but the DTI is less than 50%, then the loan is saleable to Sprout, okay? Again, you guys are going to get a copy of this presentation, and all of this information will be included for your reference. Please feel free to reach out to your account executive, the biz dev team, or the loan scenario desk if you have questions in regards to any of the parameters that you hear on this presentation today. All right, LTVs and loan amount matrices will be included in the PDF copy of the presentation. Okay, there's a lot of different variances, and it's depending upon LTV, loan amount, and credit score. So in the essence of time, you know, to keep this this limited, I'm not going to go through every single matrix that we have on our program. So, you know, I'll give you a highlight, but just know when you get a copy of the presentation, all of the loan amount and LTV matrices will be included there, so you can have those at your reference. So on the A10, the LTV and loan amount matrices will be included again in the presentation. The minimum FICO score is 680. The LTV is 70% at a max loan amount of 1.5 million. And refer to that matrix for variances in regards to max LTV, FICO, and loan amount. All right, let's move into our full doc program. The full doc programs that we have consist of the E1, the J10, and the A11. Here are some examples of when a full doc loan may be a good option for your borrowers. These are very similar to the benefits and features that we discussed on the A10 program. Receiving a DULP refer results, county loan limit restrictions, mortgage insurance the borrower may not want to pay. None of our programs require mortgage insurance, insufficient cash out, reserve requirements, and then seasoning from foreclosure. All right. This is just a quick high-level overview of the full doc programs. We're going to cover them in more detail as we continue to move through the presentation. On the E1, the loan limit is $3 million. We can go up to 90% LTV. Seasoning for significant adverse credit is 4 to 7 years. Please review the guidelines for details regarding credit. The 4-year requirement applies to short sales and loan modifications, and we're going to require 7 years for bankruptcy, foreclosure, and deed in lieu. Okay, that's on our E1. On the J10, loan amounts start at $100,000 and go up to $4 million. 1 year of documented income is required. The max LTV is 80%. There's 2 to 4 years seasoning on significant adverse credit. Anything less than 4 years is going to limit the LTV to 65%. We do require 6 months reserves on this program. The max DTI is 50%, and the minimum FICO score is 680. On our A11, again, this is our full doc asset depletion program. Loan amounts go up to $4 million on this program. The max LTV is 80%. It requires 6 to 12 months reserves depending upon loan amount and LTV. Max DTI is 50%, and the minimum FICO score is 680. All right, let's jump into some of the details of, we'll start with the E1. The Expanded Prime Jumbo product, aka E1, is slated for borrowers who are looking for larger loan amounts and are able to document their income with pay stubs, W-2s, and tax returns. The loan amounts, again, go up to $3 million. There's no MI on this loan, and borrowers with a minimum FICO score of 660 will qualify for this program. As far as income requirements are concerned, if your borrower is a wage earner, pay stubs covering the most recent 30-day period will be required, along with 2 years of W-2s. Self-employed borrowers require 2 years of tax returns, personal and business if applicable, and a year-to-date P&L is required. As far as rental income is concerned, we're going to require 2 years tax returns, including the Schedule E plus a current lease. And if the rental property was recently acquired, we'll use a current lease and apply a 25% vacancy factor to gross rent. Max DTI on the E1 is 43%. That's a hard stop there, no exceptions on that. 40% DTI for LTVs that exceed 85%. Max cash out is $500,000 for LTVs that are less than 50%, $350,000 for LTVs 50% and greater. Cash out proceeds to meet the reserve requirements will not be permitted on the E1. Credit requirements, minimum FICO score of 660, 3 trade lines in the last 24 months with at least 1 open and active in the last 12 months. Student loan debt that's within 12 months is going to be included in the debt-to-income ratio calculation. Mortgage and credit history. All right, let's talk about this for a second. There's no mortgage late payments allowed in the most recent 6 months, and then no more than a 1 times 30 in the last 24 months. 7 years seasoning from bankruptcy, foreclosure, and deed of lieu. 4 years seasoning from short sales and loan modifications. Collections and charge-offs that do not affect title are allowed up to $5,000. Some general requirements of the E1. The program is available to U.S. citizens, permanent resident aliens, and non-permanent resident aliens holding a valid visa. The borrowers must document a housing history for the last 2 years. Additional finance property is limited to 4, including the subject property, so keep that in mind. Recently listed properties require 6 months seasoning from the application date. On purchase transactions, the seller is required to be on title for 90 days, and that 90 days is based off of your application date. Gift funds are permitted. The borrower must make a minimum required investment of 3% before we use gift funds. Gift funds cannot be used to meet the reserve requirement. As far as interested party contributions are concerned, relatively similar to Fannie Mae, 6% on primary, 3% on second home, and 2% on investment properties. All right, few additional requirements. Acceptable states, please take note on the screen here of the ineligible states for the E1 program. Eligible properties are 1 to 4 unit PUDs and warrantable condos. As far as appraisal requirements are concerned, again, up to that 1.5 million is going to require 1 full appraisal. If it's greater than 1.5 million, it will require 2 full appraisals. Reserve requirements, 6 months is required for LTVs that are 80% or less. We will require 9 months for LTVs that exceed 80% and go up to 85%. 12 months are required for LTVs over 85% up to 90%, okay? If the subject is 2 to 4 units, a second home or investment property, and the loan amount is greater than $1 million, we are going to require 12 months PICIA in reserve. Same rules apply in regards to our additional finance property. We've been talking about this through the presentation, but we are going to document an additional 6 months of reserves for each additional finance property. Escrow waivers are allowed. The LTV is going to be maxed out at 80% if we're using an escrow waiver. All right, LTV and loan amounts for the primary residence on a rate term and cash out are listed here on the screen. Again, for the sake of time, I'm not going to go through all of them. So this is just for your primary residences. Please refer to the PDF copy of this deck for additional LTV, loan amounts, and FICO score requirements. The minimum FICO is 660 on the rate term and 680 on the cash out. Again, you know, with regard to the variances, please refer to the matrices. Sorry, a little slow with my screen advancing. Apologize for that. All right, let's move on to the J10 program. It requires 1 year of income documented through pay stubs, W-2, and/or tax returns. The minimum FICO score is 680. Max DTI is 50%. Financing is available for foreign national borrowers as second homes and investor occupancy only. And the max LTV is going to be limited to 60% with a max loan amount of $2.5 million. Loan amounts start at $100,000 and go up to $4 million on this program. And the investor loan amount max is going to be $3 million. As far as cash out is concerned, 70% max LTV up to $1 million. Second home is max 65% LTV to $2 million, and investment, we're going to cap the LTV at 55% up to a $2 million loan amount. Eligible properties on the J10, 1 to 4 unit warrantable, non-warrantable condos and condotels. Keep in mind that condotel properties are limited to a max LTV of 65%. Gift funds are allowed. If we are going to use a gift of equity, that is permitted, but we're going to reduce the LTV by 5% if you're using a gift of equity. Cash out for reserves are allowed, but keep in mind, just like we discussed earlier, that first 3 months of PICIA has to be from the borrower's own funds. We can't use cash out proceeds for that. Once we've documented those 3 months in reserves, the borrower's from the borrower's assets, the cash out proceeds can be used to satisfy the remaining reserve requirement. And then available terms on the J10 are 5-1 and 7-1 ARMs, interest-only options, and 30-year fixed. All right, let's talk about the reserve requirements on the J10. If the loan amount is less than $2 million, it'll be 6 months. Greater than $2 million, 12 months. Again, if the borrower owns multiple finance properties, the reserve requirements are the same as what we've discussed previously. Additional 1 month if it's a primary residence. If it's an investment property, we're going to require additional 2 months. Credit seasoning for the J10, 4-year seasoning from foreclosures, short sale, and deed in lieu or bankruptcies. Less than 4 years is permitted, but limits the LTV to 65% and will require 6 months reserve. Will allow a one-time 30 in the last 12 months on mortgage history, no late in the last 6 months. Appraisal requirements. If the loan amount is less than or equal to 1.5 million, we're going to require a full appraisal plus the CDA and the appraisal review report or the appraisal review report. Loan amounts greater than 1.5 million will require 2 full appraisals with the collateral desk review or the appraisal review analysis. I always get tongue-tied when I say those. Again, with regard to the J10, again, I'm only showing the loan amount and LTV matrices for purchase and rate term here on the screen for the sake of time. You know, I'm trying not to go line by line. There's a lot of they're tranched with, you know, credit score, LTV, and loan amount, and you guys will have that table, for your reference. So we don't need to go through it here in the presentation. Another popular product is our A11 asset depletion program. So with this program, the borrower is required to meet our net assets test. And what this means is that the borrower's assets must meet or exceed 110% of the loan amount. And we're then going to divide that figure by 60 months. All right, we are going to allow a 50% max DTI on this product, and the calculation is based on 100% of the vested balance of your borrower's portfolio. So the example here on the screen, if we have a loan amount of $400,000, our assets must be at least 110% of that $400,000. In this case, that amount would be $440,000. We'll then divide that figure by 60 months to determine our qualifying income. And it's not here on the screen, but that'll give us, in this scenario, about $7,300 in monthly qualifying income. All right, here's another example. The borrower has a vested account balance of $650,000. Assuming the borrower meets the net assets test in this scenario, we'll divide that figure by 60 months to come up with the qualifying income. Remember, the DTI may not exceed 50%, and as long as the qualifying income is sufficient, then we should be good. If not, the borrower can use additional sources of income to qualify. Qualifying sources of income for the A11, funds must be on deposit in domestic financial institutions. Funds from business accounts may be used as reserves under the following circumstances. The borrower must be self-employed. The borrower's ownership interest percentage will dictate the percentage of qualified deposits to be used in the calculation. We will use 100% of the vested balance in retirement accounts. 100% of the stocks and bonds may be used, but the funds must be held in a domestic brokerage account or held directly by the borrowers. The portfolio must be issued by a domestic corporation or political subdivision of the U.S. Directly held foreign stocks and bonds and assets in foreign brokerage accounts are not acceptable sources of assets for this particular program. Minimum FICO score on the A11 is 680. The max DTI is 50%. Minimum loan amount starts at $100,000 and goes up to $4 million. The max LTV is 80% for primary residences. Please review the loan amount LTV matrices for specific details on LTV based upon loan amounts and FICO score. Foreign nationals are eligible for the A11. Second homes and investment properties only. Again, we're going to max that LTV at 65%, 680 minimum FICO. If the borrower does not have credit, they are still eligible. Okay, same rules apply. Down payment and closing costs. Funds can come from liquid assets used for qualifying. However, the amount used as qualifying income must be deducted, and the remaining funds in the asset account must meet the net assets test. Okay, so we can use down payment and closing costs from those accounts. We have to deduct that from our asset account, and what's remaining has to meet that 110%. All right, required reserves less than excuse me, or equal to $2 million requires 6 months PITIA. If the loan amount is greater than $2 million, it will require 12 months PITIA. If the borrowers own additional finance property, the reserves are going to be increased by either 1 month or 2 months, depending upon whether the subject is a primary residence or an investment property. And then gift funds in this program are not permitted. Did I miss? Yes, the mortgage history. Okay, again, just like on some of the other products that we've gone over, we will allow a one-time 30 in the last 12 months, no late payments in the last 6 months as far as mortgage history is concerned. The loan amount and LTV matrix is here on the A11. Again, we're showing today the purchase and rate term. The minimum FICO score is 680. And you can see, we've got 700, 720, and, the LTVs and loan amounts, corresponding LTVs and loan amounts are here. Again, this will be in the presentation, the PDF copy of the presentation when we forward it on later today. So you'll have the full matrix available to you. Let's move on to the I-10, which is our debt service coverage program. All right. As I stated earlier, the rent must cover the proposed housing expense by 115%. We'll use the current lease agreement or the rent schedule from the appraisal report. Property types are 1 to 4 units, warrantable and non-warrantable condos. Condo tells are not permitted on this program. Minimum FICO score is 680. The minimum loan amount is 100,000. Max LTV is 70% for primary residences. Again, refer to that matrix for additional details. Foreign national borrowers are eligible. Interest only is not available in the state of Illinois on this program, and this is a business purpose loan. So as I stated earlier, the borrower does need to sign a business use affidavit. The reserve requirements are the same as what we've discussed on the A11. One thing that I would like you to keep in mind is that on cash out refis, the borrower, if the borrower has to document the 3 months of their own funds as reserve. After that, then cash out proceeds can be used to meet the remaining reserve requirement. Gifts of equity are not permitted on the I-10, and the borrower can have a 1x 30 in the last 12 months, but none in the last 6 months. Again, LTV matrix is listed here for your reference. Minimum FICO score is 680. Loan amounts go up to $3 million on the I-10, and just refer to the matrix that'll be included in this presentation when we send it out later today. Some important details to know on business purpose loans. Excuse me. As I stated earlier, no previous landlord history is required or previous mortgage history is required. The loan is for investor occupancy only, so no primary or second home. Properties held in an LLC or corporations are allowed. There is a 3-year prepayment penalty on this on our business purpose loans. Reference the slide for states that do not allow for a prepayment penalty. So that information is listed here, on the screen. This is a non-TRID loan, which gives you the benefit of shorter turn time, okay, approximately 2 to 3 weeks. Escrows are required, and we offer 5/1 ARMs, 7/1 ARMs with interest-only options, in addition to 30-year and 15-year fixed rate, okay? And we are going to qualify the borrower on the note rate. Foreign national borrowers, like I stated earlier, are eligible on the J10, the A11, and the I10. The property must be a second home or an investment. Occupancy. Some additional information for our foreign national programs regarding visa requirements. In the gray box that you see here, foreign national borrowers, it's for foreign national borrowers who are looking to purchase a primary residence in the U.S. They must have a valid Social Security number and meet the requirements that are listed on the screen here. The green box basically entails eligible borrowers for second home and investor occupancy, and discusses the eligible visa requirements, and then anything in the orange box is ineligible. All right, so the slide that you see here represents the full documentation income requirements for foreign national borrowers. Documentation must be translated to English. As far as if your borrower is a is salaried or a wage earner, we're going to require the most recent year W-2 and 30 days of pay stubs, or a letter from the borrower's employer stating the income for the previous 2 years, along with the year-to-date income and a breakdown of base wages. If the borrower is self-employed, provide evidence of 2 years of self-employment history, CPA letter stating the borrower's income for the last 2 years, and it must be expressed in the borrower's home currency and also in U.S. currency. Copy of the CPA's business license, 1 year of tax returns, and then copies of any business licenses will also be required if the borrower is self-employed. For using rental income, copies of the leases are required. Copies of the most recent 3 months of bank statements showing the receipt of rental income into the borrower's bank account. And of course, the leases must be translated into English. As you guys know, if you've been excuse me, doing business with Sprout, a foreign national borrower does not have to have credit trade lines or scores to be eligible. However, we do require a credit report to be documented in the loan file regardless of having scores or trade lines. If the credit report shows that the borrower has established credit, then the credit report must reflect a minimum score and trade line requirement for whatever program they are applying for. If the borrower does not have trade lines, the credit report still needs to be generated, and you would do that by using either all ones or nines in lieu of a valid U.S. Social Security number. All right, so here are some requirements as far as power of attorney for foreign national borrowers. The POA must be in recordable form. It must be insured and recorded by the title company. We do not permit power of attorneys on cash out refi transactions. Power of attorney must be specific and not authorize any other transaction. Power of attorney must be from all parties that signed the original 1003. Prior to execution and notarization, the POA must be approved by Sprout and the title company. No conflict of interest among the parties is allowed, i.e. the realtor, title agent, lender, etc. If executed overseas, the POA must be notarized in U.S. Embassy or consulate. And we do require 2 original POAs, one submitted to the title company and one submitted to Sprout. Okay, so these are all general power of attorney requirements. So I don't think there's anything different that you guys have not seen before. All right, so note that a foreign national borrower does not need to have proof of residency or citizenship in the United States. All foreign nationals qualify except for those countries that are listed here on the screen. It's important to be sure that banking institutions for foreign national programs are provided to our operations team and set up at least 10 days prior to closing. The list on the screen are acceptable banking institutions that have a presence in the United States. I think what's important to know here is that many of the foreign banks on this list do have separate U.S. and foreign entities that might require the borrower to transfer funds from their foreign branch into the U.S. branch for down payment, closing costs, and reserve requirements. This also applies to ACH drafts for mortgage payments. So we advise your borrowers check with their financial institution for any specific requirements that they might have. And additionally, it's best practice to have your borrower transfer their required funds for closing to the escrow company as soon as possible to avoid any delays. Okay, and our requirement, we like that to be set up with our ops team at least 10 days prior to closing. All right, so we're reaching the end of our presentation today, but a couple more things I want to mention to you. We would like the opportunity to earn your business, okay? And if you're not sure if your borrower or client will qualify, just send us your scenario, okay? As I stated earlier, you can upload your documents on our secure portal. Be sure to keep your account executive in the loop so he or she can manage those expectations for you. Keep in mind that our support desk is available Monday through Friday from 9:30 a.m. to 9 p.m. Eastern Time. A telephone number is listed here on the screen for your reference, and again, you'll have a copy of all of this information. Some resources that are available to you: we offer customized training for your team, branch, or referral partners. Additionally, the Sprout Marketing Store allows you to customize flyers and materials for your clients and your partners in real estate lending. Okay, so please utilize the Sprout Marketing Store. There's lots of great stuff in there for you guys to customize. And of course, if you are in need of submission-related training, we offer webinars every Monday and Thursday. The trainings are facilitated by Lori Kokosinski. She's another member of the BizDev training team. And the information and details to join are listed here on the screen. And then finally, if you need additional product training or have questions about how we can be of service to you, please reach out to us by sending an email to bizdev@sproutmortgage.com. Again, we appreciate you joining us today, and we look forward to helping you grow your business. I'm going to leave the questions box open for just a few more minutes. I know our BizDev team is diligently answering your questions and have been throughout the presentation, so I want to give the opportunity to put some last questions in there for us to be able to answer. And those that did not get an answer during the presentation will follow up with an FAQ along with the presentation. So I appreciate you guys taking the time to join us today. We have a nice group today, 65 attendees. So very happy to see you all here. We hope to see you at the next training. And thanks again for joining us. Have a good day, everybody.